Greetings everyone. Let us start with today's topic, that is principles of management. The topics that we are going to cover under this are controlling and control techniques, which includes process, type, barriers, budget and non-budgetary control devices. The next topic will be social responsibility and now let us talk about controlling and controlling techniques. Controlling is a process in which actual performance is compared with the company standards. Comparing it gives the visibility that activities are performed accordingly to the strategy or not. If it is not performed, the necessary corrective action should be taken. Controlling techniques, types of controlling techniques of controlling which are the first one is direct supervision and observation, financial statements, budgetary control, break-even analysis, return on investment, management by objective, management audit, management information system. Now let us talk about the process. The control process consists of the following basic elements and steps. The first one is establishing goals and standards. The second one is measuring actual performance against goals and standards. The third one is taking corrective actions. And the last one is following up on the corrective actions. In establishing goal and standards, we say that it is the task of fixing goals and standards that takes place while planning, but it plays a big role in controlling also. This is because the main aim of controlling is to direct a business actions towards its goal. Measuring actual performance against goal refers to once managers know what their goals are, they should next measure their actual performance and compare it to them. This step basically helps them in knowing whether their plans are working as intended. Taking corrective actions. In case there is any discrepancies between actual performance and goals, managers need to take corrective actions immediately so that they can align with their company's goal. Following up on corrective action, just taking corrective measure is not enough. Managers should also take them into their logical conclusion. Even the step requires evaluation and comparison. Now let us talk about type. Type of control management techniques. Often divided these techniques into two categories. The first one is traditional and modern. The traditional types of techniques generally focus on non-scientific methods. On the other hand, modern techniques find their sources in significant methods which can be more accurate. Traditional types of control techniques in management. The first one is budgetary control, standard costing, financial ratio analysis, internal audit, break-even analysis, statistical control, and modern techniques of control which are commonly used in present are return of investment, that is also known as ROI, program evaluation and review technique, that is also known as PERT, management information system MIS, management audit. Now let us talk about barriers. Barriers to managing control include lack of resources, inaccurate measurements, improper information flow, and incorrect analysis. Resource scarcity. Managing control typically requires number of resources. These resources include supervisory staff, skilled specialists, tools to measure the control of system, and often complex statistical software and other tracking technologies. The next one is inaccurate measurement. Inaccurate measurement while managing control can happen for a number of different reasons, which include first one, inaccurate measuring devices, misunderstanding of management process by staff, inaccurate or misleading measurement process, lack of staff training to determine how to measure the control process, information flow issues. A particular complex barrier to offset is information flow. Information is collected at one point in the process and analyzed contextually at another. Now let us talk about budget and non-budgetary control devices. Techniques of controlling. The first one is budgetary or budgetary control. Budgetary control is a system which uses budget as a means of planning and controlling all aspects of producing or selling commodities or services. Thus, budgetary control is planned in advance so that various aspects of business can be controlled. Essentials of effective budgetary control. The first one is effective organization. The second one is quick reporting. The next one is support of top management, reward and punishment, appropriate authority. The second one we'll talk about is non-budgetary control devices. Cost control. It includes techniques such as cost accounting, standard accounting, and break-even point analysis. Now let's talk about cost accounting. Profits of a business enterprise depend very much on the cost of production. Because of this, cost accounting and the cost control are given much importance by the business concerns. Now let's talk about the standard costing. Standard costing is one of the most important techniques of cost control used by business concerns. The steps involved in the standard costing are deciding cost standards for various components of cost such as labor, raw materials, management of actual performance, comparison of actual cost with the standard cost, and finding out variances. Now let's talk about managerial statics. Managerial static deals with data and methods which are useful to management executives in planning and controlling organization activities. By using such data, an analysis of past performance is made for control process. Now let's talk about social responsibility and business ethics. Social responsibility means that businesses, in addition to maximizing shareholder value, should act in a manner that benefits society. Socially responsible companies should adopt policies that promote the well-being of society and the environment while lessening negative impacts on them. Companies can act responsibly in many ways, such as promoting voluntary, making changes that benefit the environment, and engaging in charitable giving. Business ethics refers to implementing appropriate business policies and practices with regard to arguable controversial subjects. Some issues that come up in a discussion of ethics include corporate governance, insider trading, bribery, discrimination, etc. The law usually sets the tone of business ethics, providing a basic guideline that business can choose to follow to gain public approval.